Obviously, I can't answer that, but I can give you the facts so that you can make up your own mind. Today, we're diving into a vital topic that could have a significant impact on your financial future. With the growing concerns about an imminent financial collapse, it's essential to start thinking about diversifying your investments just in case. In this video, we'll explore why investing in gold and whiskey could be a smart move. Let's get started. First, let's talk about China's gold accumulation. Over the past decade, China has been steadily increasing its gold reserves. The People's Bank of China now holds over 2,000 metric tons of gold, making it one of the largest gold reserves in the world. Not only that, but China has also been actively purchasing gold mines around the globe, ensuring a steady supply of this precious metal. This strategic accumulation indicates a strong belief in gold's value and stability. China's actions go beyond gold accumulation. They are also making significant strides towards de-dollarization. For instance, China has engaged in bilateral trade agreements with countries like Russia, allowing them to settle transactions in their national currencies instead of the US dollar. Additionally, China has launched crude oil futures contracts denominated in yuan, known as the Petroyuan, challenging the dominance of the petrodollar. These efforts aim to reduce reliance on the US dollar and create a more balanced global financial system. China's Belt and Road Initiative is another major factor to consider. This massive infrastructure and investment project spans across Asia, Europe, and Africa, increasing China's economic influence. Alongside the Belt and Road Initiative, the Asian Infrastructure Investment Bank offers an alternative to Western-dominated financial institutions like the IMF and World Bank, further strengthening China's position in the global financial system. Furthermore, China is at the forefront of developing a central bank digital currency, the digital yuan, which could facilitate cross-border transactions and reduce dependence on the US dollar. On the domestic front, China has been gradually opening up its financial markets to foreign investors. This includes allowing greater foreign participation in its bond and equity markets. Additionally, the digital yuan, China's central bank digital currency, is poised to revolutionize international trade by reducing transaction costs and dependence on the US dollar. These reforms are designed to increase China's financial resilience and global influence. Recent US policies, including large fiscal deficits and quantitative easing, have raised concerns about the long-term value of the US dollar. This, coupled with increasing geopolitical tensions between the US and China, is leading some investors and countries to seek alternatives. Historical precedents, like the shift from the British pound to the US dollar as the world's reserve currency, show that such changes are possible, especially in the context of shifting economic power dynamics. China's global influence is growing through substantial loans and investments in developing countries, often with fewer strings attached compared to Western financial institutions. This builds economic dependence and loyalty. Additionally, China's advancements in technology, particularly in fintech and digital payments, are positioning it as a leader in the future financial landscape. The expansion of BRICS, now attracting new members, further supports the idea of an alternative economic and financial bloc aligned with China's vision. Gold has historically been seen as a safe haven asset during times of economic uncertainty and inflation. China's accumulation of gold could be viewed as a hedge against potential future instability in the global financial system. Meanwhile, the US dollar's dominance is being challenged by large fiscal deficits, political instability, and declining international confidence. Discussions around reforming the international monetary system to reduce reliance on the US dollar are gaining traction, with China's initiatives potentially part of a broader movement towards a multipolar currency system. Given these factors, investing in gold could be a smart move. Gold has proven to be a reliable store of value and a hedge against inflation and economic crises. There are several ways to invest in gold, including purchasing physical gold, investing in gold ETFs, or buying shares in gold mining companies. Each option has its pros and cons, so it's essential to research and choose the best strategy for your financial goals. Now, let's talk about whiskey. You might be surprised to hear that whiskey can also be a lucrative investment. High-quality whiskey tends to appreciate in value over time, especially rare and limited edition bottles. You can invest in whiskey by purchasing bottles, investing in casks, or even participating in whiskey investment funds. Historical data shows that whiskey investments have outperformed many traditional assets, making it an intriguing option for diversifying your portfolio. To wrap things up, I'll give you my prediction. Currently, the United States is a complete melting pot with anger running very high. Everybody hates somebody else. Whites, blacks, straights, gays, Christian, non-Christian, Jew, Islamists, children hate their parents, doctors doing horrible things to children, citizens against people coming over the border. Both Democrats and Republicans hate each other with a passion, and at the end of the year, Trump will most likely be president. That is when the Democrats are going to lose it completely. I think it will be very close to a second civil war. That is going to be the most likely time when China will make its move to make the yuan the global reserve currency. That will plunge the world into a recession like never before. So it's crucial to consider diversifying your investments in these uncertain times. Gold and whiskey both offer unique opportunities to hedge against potential financial instability. As always, do your research and consult with a financial advisor before making any investment decisions. If you found this video helpful, please give it a thumbs up, subscribe to the channel, and share it with others who might benefit. Thanks for watching and see you in the next video.